Good morning, everybody. Welcome to the latest instalment of Talking Ball. I'm Joe Neighbour, joined by Jamie and Steve again on the 21st of April. How are we doing this morning, gents?
Very well, thank you. Yeah,
Very
a little
good.
bit
Thank
better
you.
than all the Chelsea supporters out there.
Yeah.
Yeah.
Well, they are champions of the world, aren't they? So, sure they're not going to cry too
Are
much.
they,
It could be a
are
lot
they
worse.
though? Are they though?
Are they really? Yeah, good stuff. So, right, let's get stuck in, shall we, to the latest events moving markets today. So first of all, headlines. The Fed is continuing to influence market expectations at the moment. In comments yesterday, the San Francisco Fed President Daly stated that it would be prudent to raise rates by 2.5% by year end, as moving purposely towards a more neutral stance is a top priority. She added that the Fed will then need to assess the financial conditions and inflation to see what more needs to be done. US long-term yields edged lower yesterday, retreating to around about 2.85%, having hit 2.97% in the previous session. There was again a glimmer of optimism that the US inflation pressures are peaking, with the beige book slightly less alarmist over inflation pressures. There's been a limited correction in the dollar. The yields yesterday triggered a dollar correction against all major currencies, although there's little evidence at this stage of a shift in the overall market dynamics. Still looks pretty bullish overall. We'll come on to some charts of that shortly. In terms of what's going on with the ECB, the rhetoric was slightly more hawkish on that side of things. Council member Kazaks stated that a rate hike was possible as soon as July, as a gradual approach does not mean a slow response, and that the central bank does not need to wait for stronger wages growth. The ECB consensus for now is that interest rates will be increased at some point in the third quarter. The G20 were quiet on the yen slide. The Bank of Japan continued to intervene to cap domestic bond yields, and Bank Governor Kuroda stated that forex stability is desirable. There were, however, no significant warnings over currency levels from the G20 meeting, and overall yield spreads triggered renewed selling pressure on the yen. And finally, in terms of inflation data, we had the latest numbers from Canada yesterday, and that number surged to a 31-year high, increasing 1% for March, and the year-on-year rate jumping to 6.7% from 5.7% previously, which was well above the forecasts of 6.2%. The core inflation rate increased to 5.5%. So we are also expecting further aggressive tightening at forthcoming meetings from the Bank of Canada. So that's it for the headlines. Let's get stuck into some charts. Steve, what's catching your eye over the last 24 hours on the chart side of things?
Well, I'll start with Bitcoin. We're still seeing the price action moving in this bearish flag looking formation. It did reach a high yesterday of just above the 42,000 level. Retraced slightly from there, just trading under there at the moment. Still in this big old channel. So still overall, still feel like we're forming a bearish flag, whether it would be this larger one we're talking about or the smaller one on the shorter term chart. Here we go on the hourly chart. We saw the price form a evening doji star at the top yesterday. That was around about 1 or 2 o'clock, and then price moved lower, back down to just below the 41,000 level, hovering above that. So really not Ethereum as well. Looks a little bit toppy, almost like a head and shoulders formation. If we get a break below the 3030 level, that should open up further downside on that. But commodities had a decent move in oil yesterday. We'll get to it on my gun to head trade idea, but you can see there it thankfully hit target. If it hadn't hit target over the oil inventories number, really, that's around about that time. Obviously, there's always increased volatility there, but really sort of forming this head and shoulders formation in my eyes, something really got to look out for. What we even going to go there potentially? Whatever it does look a little bit like that. It looks like we have got to really look out for the downside. However, we've still got the Russian-Ukraine threat. So it feels like we've broken, or we've formed the head and shoulders formation, this hourly close here, and we're retesting the neckline, but it's actually back up to where the shoulders are. Just as long as we stay on the WTI crude oil below 104, then I think there's further downside. A break of that could mean there's been some sort of escalation on the Russia-Ukraine front, and we could see higher price levels. So teaching on the verge of further volatility. Gold has calmed down. We did get down to 1940 yesterday before the rally higher got up to 1958, just short of 1960, and we're hovering right in the middle, 1950 trading. But again, a little bit on the defensive, but maybe there's an underlying bubbling of volatility that we could see explode in the next couple of days. Taking a look at maybe a longer term chart, we're still looking at a potential head and shoulders, although it's very extended, so not so sure about it now. But we have definitely seen this rejection from the $2,000 level, and really the bulls need to capture ground above there for further upside to retest the 2075 all-time high. Yeah, that's about it really. Not really a huge deal going on at the moment. Maybe there's something a bit more interesting on the indices or something.
Not really. I mean, first of all, congratulations on your gun to the head trade yesterday. That was a very nice one indeed. But yeah, we can start off with indices if you like. So FTSE 100 initially still underneath this big resistance zone at 76.78. We saw some green yesterday, but we are lower today already by almost 0.5%, engulfing all of the gains that we made yesterday. So it just is starting to feel a little bit top heavy up here, and the potential for this to roll over to the downside in my eyes. And given that there are some pretty heavy links to commodities in this index, we were keeping an eye on that, particularly the oil setup that Steve mentioned. Is there a head and shoulders forming there that would have bearish implications on this market for sure, and also actually on the Aussie market, which is banging into some resistance levels here, as we can see. 76.20 is the level that I've highlighted. I mean, it's more of a band of resistance probably than an actual number. So something along those lines is what I'd be looking for the market to overcome before we can continue to expect more upside. So potential for it to stall in here, I think, and again, it's going to be linked to commodities, so keep an eye on that. If we take a look at DAX, that's rallying into some downtrend resistance. We are seeing a decent amount of consecutive up days on the DAX now. What's that, 7 today if it holds on to some green? Obviously a long way to go in the session. Overall, I do still think that we are going to see lower prices in the indices, and that the pressure is still on the downside, but we could see some more upside into this resistance level here on the downtrend side of things. If we take a look at the US indices, we drew on these inverse head and shoulders setups, which are only potential setups at the moment, because before we can start calling it a head and shoulders, it needs to break through this neckline up here at 15,304. That's on the NASDAQ. I was looking at this as a decent trade on the gun to the head setup. I mean, if we look at the intraday setup, there was also another inverse head and shoulders that was forming there. I was feeling pretty good about myself early on in the session, around 1 o'clock in the afternoon. I was thinking, oh, this is good. This is set for target. And bang, I got a big old slap in the face with that and a stop out. So sadly, that's the way it goes. But moving on to the S&P 500, again, it's a similar sort of situation. There is the potential for an inverse head and shoulders to be playing out here. We've found some support around 4,360, and we've posted, as things stand, 4 consecutive days of gains, assuming that today holds on to a winner as well. So still more to be done on these, but I think maybe the US markets look a little bit more interesting than some of these commodity linked markets like the FTSE 100 and the ASX, for instance. If we move on to FX, the dollar index, as we said at the top of the show with the market highlights, the dollar index has corrected from the highs that we posted on the 19th of April, having reached highs of 101.02. Posted a fairly lumpy looking candle on the downside yesterday and backing that up with further losses today, down by almost 0.3% as things stand. And as we said in the commentary, we don't expect that to be any kind of major reversal at this point. It is just really a little bit of steam coming out of the market, maybe in the short term. Overall, it still looks pretty bullish, and we're still expecting to see higher prices. The resistance levels on the upside are 101.40, and then above that 102.93, which is up here, which is the previous highs that we hit back at the height of the pandemic. So a little bit of froth coming off the top maybe of this, but overall still looks pretty bullish. If we take a look at Aussie, that was on the front foot yesterday. Looks to be trading in a bit of a bullish channel. A couple of reasons to be interested in this, actually. So this is the downtrend that has plagued Aussie US dollar since March 2021. We saw a break through that and then a nice pullback to retest that. Also at some trend support as well here. Really nice reaction from that. So potential maybe for higher prices there. Then that would go against what we're saying with the commodity prices. So there is a little bit of confusion going on, I think, in the markets at the minute, and it's not very clear cut. So just be careful if you are trading these markets at present. Let's take a look at Euro US dollar. That has bounced from some support around this kind of region. Again, it's more of a band than a specific number, a 108.03 to 107.60. A little bit of a bounce taking shape over the last couple of hours in line with that dollar correction that we've seen. So it remains to be seen whether or not it's got the legs to continue moving higher from here. That will do on the currency front. In fact, let's just finish off on dollar yen, because obviously everybody's watching yen at the moment. We saw a correction yesterday just in front of this 130 level. We've got intervention written on here because this is where the finance minister said they'd be interested or considering maybe larger intervention. They are trying to cap the bond markets at the moment. So that 130 level, I think, is a key level to watch still on this market. Okay, Jamie, over to you. What's going on in stocks?
Thanks, Joe. Right, we'll start off today with the biggest winners and losers of yesterday's session. Start off with the biggest winner. We've got Target Hospitality, which was up 20% on the day yesterday. I'm not going to dive too much into the fundamentals of why, but I thought I'd actually look at the technicals of this and how it played out quite nice as a potential technical trade. So we had this. I can make my chart work. Here we go. We had this, obviously you can see on the left side here, we had this big impulsive move up where it gained about 100% in a week or so. We then ran into this resistance level of, and you can kind of see, let's drill down to a 4-hour chart to make it a bit clearer. Well, it's not too pretty. We had this resistance level here about 622, and our market is resistance, which we headed towards the day before yesterday. And what I really like about this is we had this resistance, and then just before we got this big breakout on the volume yesterday, we had this huge volume dry up relative to the last 20 days, which is what this blue line represents. This is the 20-day moving average for the volume. So you can see that these days here all dipped severely under what the average was for the last 20 days. And then on the back of that, we had this really bullish candle yesterday with really good volume, which saw the 20% move complete. So that was a really nice technical trade, looking at that break there of that kind of 620 to 640 level. Biggest loser, we're revisiting Netflix again, because not only did it have a really bad earnings, it then sucked as well during the session yesterday. So obviously we had this big gap down, and then we ended down another, from open to close, another 7% on top of the, I think it was 20% move we already had. So down 35% on the day, which is pretty rough, especially off the back of the session, the weeks we'd had before that, where Netflix was already struggling. So now we're down, I think we did look at this yesterday, we'll have a look again. We're down 67% from the all-time highs from back in November. So these things can change really quickly. And as we always say, be careful of your risk management and make sure you've got something in place to avoid blowing up accounts from moves like this. We'll jump in a couple more. I think we had Tesla's earnings yesterday, so let's have a look at how that reacted. So Tesla, this chart doesn't show the after hours trading, and this is how Tesla traded throughout the day. So actually on the day, it had a pretty poor day. It was down 5%. And the earnings came out after close, and we can drill into an intraday, and it pretty much regained all of that. I think finishing probably flat on the day. It gained about 5-6% on the day. So quite good earnings for what I'm aware, and we could perhaps another time drill down a bit into the numbers of those. But
Steve, did you find a way of looking at the all sessions on TradingView? Was there a code for that?
No, I didn't. I just selected a different exchange. I'm sure you'll find it if you sort of like went Tesla.
Well, I've got Tesla at IG on the all sessions up 5.5% as things stand.
Oh, cool. Yeah, I certainly like to say, yeah, the earnings were. So if that's in all sessions, that will be up 5% today, would it? I'm not.
Yeah, on the open.
Oh, cool. All right, brilliant.
It's an indicative price, but yeah, that's what's expected.
What you got it trading, Joe?
On
1,050.
IG, it's trading at is it 10,031? 1,031?
1,000. Oh, I got it at 1,050 on that crypto exchange that we found yesterday. Tesla against the US dollar.
Okay. So yeah,
yeah.
I'm getting confused by IG's prices are doing pence, don't they? So yeah, it's 1,031 on IG.
All right. Yeah. Okay.
Cool. Yeah, but a nice, I think, certainly a positive surprise for Tesla. I think that earnings per share were higher than what the estimates were. So a better earnings than Netflix, that's for sure. I think there were some other earnings. Maybe we can check out the corporate calendar a little bit later, but we'll drill into a couple more quickly. We've got Cisco, nothing too exciting there. Oh yeah, I was going to take a quick look at Vector Group, which we looked at last week, and I was saying that if we got a weekly close above this, what was a resistance level at 100, and above this downward trending resistance line, then that would be a really positive sign for the bulls, and we did get that. We got a very nice weekly close. Actually kind of closing at the next level of resistance, which is kind of around this 135, 140 level. So what I'll be looking at from here now, obviously we've had 7 up weeks in a row. It wouldn't surprise me if we had some kind of pullback from here. And I think the obvious area to target is this confluence of the previous 100 level support, which kind of coincides with that resistance line, which could act as some support as well. So I'd probably be looking for a turn to this kind of level, and that could be quite a nice area to think about getting long. I think that's pretty much it on the stocks. Generally, it was quite a bad day for a lot of the tech companies, as you highlight in the indices. Did have a lot of struggle, a lot of big percentage moves down again. I think if we change this to percentage up here, you can see that Shopify, Roblox, Peloton, all down 13, 12, 11. Some big percentage moves down. So especially for a lot of these stocks that are coming into earnings. So Shopify, I've got the earnings here coming up on the 5th of May, according to TradingView. And this price action going into earnings is a little bit scary to me. But, anything can happen with earnings. So we will wait and see how that all plays out. But we'll leave it there on the stocks today.
Cool. Okay, just before we go into the gun to the head, this was the Tesla results on the corporate calendar. So we can see that the forecast was for $1.9 earnings per share, actually came in at 2.86, a 51% beat. So well ahead of what the market was expecting, which is why we're seeing the price being called up so substantially on the open today. If we take a look at Thursday's earnings, we've got 66 companies reporting in the US today. So there will be some big names amongst that: American Airlines, AT&T, Freeport-McMahon, amongst many, many others. So we'll try and dig through that and see, what the big move is on the day. And we'll review that tomorrow. But yeah, pretty cool tool for checking that out, that's for sure. Okay, gun to the head trades from yesterday. Just to reiterate what it is that we do here, we are tasked with finding a trade idea live on the video each day. Each of us must pick a trade with a stop and a target and a risk reward ratio in excess of 2 to 1. All the ideas are placed at market, and we place them directly onto our TradingView profile. So if anybody wants to see how these trades play out, then it's all time stamped for everybody to see on our TradingView profile, which I'll show in a second. These ideas will expire at 9 p.m. or when the stop or the target is hit. and we maintain a performance spreadsheet as well to let you know how we do. So these are the trade ideas from yesterday. Jamie went short of euro sterling, which if we press play, we can see sadly that was stopped out initially. And it's already had a big move today. Mike trade on Nasdaq got off to a pretty good start, but then failed, having hit the stop later on in the session. But Stevie saved the day with his short on oil, hitting target on that around about 5 o'clock yesterday. So well done to you, Steve. That's a nice 3R win, or 3.5R win. 3.5. Sorry, 3.5R win on oil. So Steve, it's your honour today on that basis. So what have you got for us?
Well, I'm sort of thinking of playing the same old fiddle today. Yeah, I might do the same thing because it worked yesterday, so why can't it work today? We're still around the same levels. We've still got a little bit of risk if we sort of like break above the 104 level in WTI crude oil. So, you know, I've got a little bit of a few bullets to play with now after yesterday's humdinger. And I'm going to go short of this. The last hour, we've seen a doji, so stalling around about this resistance level, even a hanging man candle playing out in this hour, although we've still got 38 minutes left, so still a way to go. But let's look for similar sort of move to yesterday and get the stop a little bit tighter than it is. Still feel like we've got to have it, you know, give it at least a dollar or 100 points, whatever you want to call it, and maybe target a little bit less than yesterday, maybe target $3 on the downside. So in front of that psychological $100 level for the WTI crude oil, yeah, I'm going to go for it again. There we go. That's it. Selling WTI crude oil 103.48, target 100.48, and a stop at 104.48.
Good on you.
Very
Good
nice.
luck. Jamie, have you got anything? Please say yes, because I haven't.
Yeah, I mean, I have got something. This isn't the kind of trade I love doing for Talking Boy. I always say I look for breakouts and whatnot, but I can't see anything on that front that I particularly like today. So I'm going to try something a bit different. This is pound against the Swiss franc. We're coming into this resistance level, quite a key one as well. And obviously the price action on the short term has been very bullish, but I'm going to look to kind of scout this resistance level for a temporary move lower. We've got this bearish outside candle forming on the 4-hour chart, so I'm going to hope that that's a sign of at least a temporary reversal lower. So I'm going to try and sell this at, I'm really bad at reading out numbers. We're going to sell it at 1.2387. We're going to take profit at 1.2274, and we're going to have our stop at 1.2424, which gives us a nice 3.05 risk reward move. I've actually already lost some, but here we go. That's part of the game. We'll give that a go. Hopefully we get a little bit of a temporary move lower. I wouldn't be surprised though if this level does eventually break, but I'm hoping it will be next time it gets around there.
Cool. I'm also going to take a look at sterling actually, and I meant to point this out on the the FX analysis that I did a little while ago. This is sterling versus Japanese yen. So as we know, Japanese yen super weak at the minute, so everything is going up against it. Sterling being one of those. However, it's not the strongest at the moment, sterling, when you compare it to the other currencies. So looking at this on a technical basis, what we've seen is this move here. Higher, which formed a bit of a range. We then saw a breakout of that range. Now, the measured move of that, or the 100% level of that extended higher, comes in at 167.96, which we hit pretty much to the tick yesterday with this red candle and a bit of stalling into that level. So I'm actually going to try and back some yen strength, which really is standing in front of a moving train. But that's the game. Big risks, but potentially big rewards on this one. So I'm going to try and sell it. Just going to finesse this entry on the intraday chart. Get rid of these drawings. Let's get selling. It's currently trading at 167.23. I'm going to put stop loss above the highs at 168.47. Then it's a case of where do I go with the target. Let's just have a little scroll back and see if we can find any levels that might be of interest. It's a difficult one. because it's just been pretty much a straight line move higher. So what I'm going to do is look for a 38.2% fib of this entire move here and target that, which is a long way down. There we go. 161.75, looking for 4.4R on that today, selling sterling versus Japanese yen, and this will be published onto our TradingView account in a moment.
Very nice.
Nice one.
I feel a bit worried we're both trying to sell the sterling. I feel that's
Don't worry, Steve will save the day on oil.
Thanks, Steve.
Well,
Gotcha.
actually, talking about the different currencies, because obviously oil is very affected by dollar. You're talking about sterling. One thing that David Bell from Macrodesiac just highlighted this morning. So it's his figures. I haven't really checked anything out, but with Netflix, they've got 6 million Netflix subscribers in Japan, and they saw a $280 million FX loss. In other words, they didn't hedge any of their exposure to the Japanese market. So they were taking the currency. The dollar's obviously got stronger. They've seen a $280 million loss over the 2020-2021 data. That sort of suggests sort of a little bit of poor management, not sort of thinking about where your income's coming from.
Yeah, that is mad, isn't it?
Yeah. So thanks for that, David Bell.
Yeah, nicely done. Okay, data-wise today, let's just wrap it up, shall we? We've got US jobless claims at 1:30. We've also got the US Philly Fed survey at the same time. At 5:30 UK time, we've got the Bank of England Governor Andrew Bailey speaking. And then shortly after that, at 6 o'clock UK time, we've got the Fed Chair Jerome Powell. So these will be well watched, obviously, for what the central banks do next as the next steps in order to try and combat inflation and while keep the economy going. So do be careful around those times. Later on this week, well, tomorrow, in fact, we've got the European flash PMIs. And then over the weekend, we've got the French presidential election runoff. So that will impact the euro, no doubt, and probably some of the European indices come next week. Anything else to add, gents, before we wrap it up?
No, that's all good.
No, good for me.
Lovely. Well, we are off to London now for the day. So I'll be catching you, gents, very soon on Thursday. Sorry, bit of a mouthful, isn't it? Thursday. Okay, we'll be back tomorrow. Hopefully, fresh. Feeling fresh. Yeah, hopefully. All right, guys, have a good one.
All right,
Nice one.
cheers.
See ya.
Thanks,
Bye-bye.
guys.